I suppose the question is, how much should the CEO of a large mining company like BHP end up with after five and a half years of running it? What's the correct?
Well,
what's the correct number? It's not zero.
They would say that if they're the biggest in the world, then their salaries should be commensurate. You know, that they should be getting the biggest in the world. That's what they'd say. Whether or not that's appropriate or not.
Better than a lot of others in the world. They've done better than a lot of their peers.
Yeah, I mean, you can argue that against their peer group, they've done better. Therefore, they should get more. If all the results are bad and you're the best of a bad bunch, I'm not sure that that's necessarily right in an absolute sense.
So we've got to move on to the other results, and it's been a busy week, so let's check out some of the more significant ones. As mentioned, BHP was hit by falling commodity prices, as was Fortescue, and the market didn't like that. The steelmakers fronted up. BlueScope did okay. Arium, the old one, still didn't. Also, there was a mixed bag in the media. The online job ad business Seek was flush with advertising dollars, but the taps have been turned off at 7 West Media. The local insurers IAG and Suncorp did pretty well, as did Qantas, but Origin Energy was arguably the week's biggest disappointment. So overall, I think you've been adding up. The theme of the week really was cost cutting. So 1,700 job cuts announced on Thursday alone.
Yeah, I think it's going to get worse too. I think mining and mining services are facing their own fiscal cliff in about 2014, and we'll see a lot more job losses.
What's that from? Just when the investment ends?
Well, there's no transparency in terms of the pipeline of projects that are coming through after 2014, and we just heard Marius Kloppers talking about the fact that iron ore prices. He's effectively saying iron ore prices are going to go a lot lower, so you're going to see a lot less capex, and that means that you're going to see, I think, a lot of mining services businesses go broke or close down because they'll all be competing for a smaller number of jobs. There'll be pressure on margins because they'll be competing to get that work, and there'll be a lot of people let go. So the boom that we've seen in Western Australia, it's in the past.
Origin Energy was a big disappointment. It cut its full year forecast again, and costs at its LNG project in Queensland are blown out. You can see here its shares were smashed. They were down almost 9% just on Thursday, its biggest single-day fall in 4 years. And it's interesting to compare its performance with rival AGL. Over the past 12 months, AGL is up around 10% and Origin is down almost 20%.
So what we find is a lot of these businesses that have exposure to electricity, which is regarded as a stable cash stream, they tend to be bought by long-term pension funds with a long time horizon, and those pension funds are happy to receive a return that is CPI plus 1 or 2%. So they're happy to pay higher prices than the intrinsic values of these businesses, and that's why we see they're always perpetually high, and so when they disappoint, it hits with a thud. But Origin had the quadrilla this week. You know, they missed analyst expectations. They had a blowout in costs. This is the second downgrade in a while. It's been absolutely horrendous for them, and it doesn't look like it's going to get any better because that electricity part of the business that we thought was going to be stable, where we've seen the Queensland government come in and say, well, actually, no, that's not right.
The rail business, formerly known as Queensland National, well, now Horizon, put out a result this week that was almost as disappointing as its name, and lowered forecasts. Clunk.
As a fund manager, it's not unique to Horizon. You know, you see cash flow from operations for Telstra, for example. Their interest on debt is in the financing section, not in the operating section, where for most businesses it's put in the operating section. So it's not unique.
Yeah, that's true. That's true.
Qantas had an interesting result. Its core domestic business was hit hard by competition. Earnings were down about 30%, big increase in overall profit, propped up by compensation payments from Boeing. Nevertheless, the market liked it. Here's Qantas boss Alan Joyce.
While we are making excellent progress in our transformational programme, there are still challenges ahead. We'll continue to incur transformation costs, such as the $40 to $50 million impact of moving our major hub from Singapore to Dubai. We can expect ongoing and vigorous challenges from our domestic and international competitors. And the external environment remains complex and volatile, with uncertainty in fuel prices and exchange rates.
Roger, Warren Buffett famously said that if he ever gets an urge to invest in an airline, he has a cup of tea and lies down until it goes away.
Well, he actually said had he been at Kitty Hawk in 1904 or whenever it was that Orville Wright took off, he hopes he would have had the presence of mind for all capitalists to have shot him down because so much money's been lost in airlines. This is BHP that I discussed earlier, that those sorts of numbers exponential, and really the market, if you look at the market capitalisation of Qantas today, it is less than all the money that's been contributed by shareholders over the last 10 to 15 years. This is a really tough business. It's capital intensive, it's labour intensive, you've got fuel prices that you can't forecast, and you've got irrational competition. It's never going to be an easy business to run, and I think the only reason why fund managers in Australia buy it and ever own shares in this business is because it's in an index, and therefore they've got to make sure that their tracking error doesn't go too far away from the index, and so they have to buy it. But otherwise we shouldn't be talking about it. It should be owned by a government, and in overseas it is owned by governments or royal families.
Well, they used to be owned by governments.
Exactly.
Until the government sold them. And,
notwithstanding the fact you could probably break it up, sell off the assets, pay down the debt, and you'd end up with the frequent flyer business probably for free or self-funded. But the rest of the business, really, it's a social welfare opportunity for the government to win some votes. I think they should own it.
Tell us what you really think about it.
No, but
It's just a terrible business. It's not a business.
Well, there's another business that had results that were dressed up. The underlying earnings were a lot worse than what the headline number was. Their domestic business is struggling, not going down the toilet exactly, but is under a lot of pressure. And there was a one-off payment from Boeing that actually boosted the headline numbers.
Profit was $111 million. The payment from Boeing was $125 million, and that was because of the delays to the delivery of the planes. Analysts liked the result because they said that, yes, but you've got to understand that there's a $136 million one-off restructuring charge. Well, my view is that if you restructure every year and you have restructuring charges every year, they're not one-off.
it was a busy week for media stocks. APN had a tumultuous week, in fact. The CEO and chairman were booted out, big loss and big write-down in value. So with APN, what's going on there?
What's happening is the speed of attrition in traditional media is fast. And the media companies need to get onto the digital bandwagon to stave that off. And what's happening is the investment has occurred relatively late, and so it's not making up for the loss in the traditional media space. You look at Seek, for example, Seek Media, the online job site. There's still enormous structural change that's going to benefit a company like Seek, because about 65% of jobs are online. So there's still another 35% of jobs that aren't online yet. So really, the big media companies need to invest in digital now, and need to invest in platforms that will bring back that classified business, that will bring back the eyeballs, so that they can start generating revenue that will offset the declines in the traditional space.